there's no lack of financing. There's a lack of good projects and there's a lack of good policy. The finance industry is really trying to do their best. But you will never have an APG going to look at a 5 megawatt solar project. It is not worth, even it's a perfect project, it has a 20-year PPA with a very good off-taker, they will not do it because the transaction costs are too high. And what we see in this market, we see many small projects. And that always have a bolt somewhere that doesn't work. So that's not the market that they are looking at. They're looking at 20, 50, 100 megawatt utility scale.
The reality is the risk-adjusted return gap. It's a gap in expectations between the money, or the guys having the money, and what's available in Asia in terms of opportunities. So that's the new trend that we see from institutions like ADB, World Bank, AFC, and also European development agencies, where they invest in the private sector to create opportunities, to de-risk projects, to invest in the first miles, the early stage, to increase the flow of opportunities of projects, to bridge that gap of opportunities that the private sector will accept and will invest in.
The actual development of green bond globally, to a certain extent, really kicked off only after 2013. So if you look at it from a timeline perspective, green bond is really much in its infancy. Just to give you in context, I think from a global perspective, 2013, we have about over $11 billion equivalent of green bonds being raised for obviously environmental sustainability purposes. Contrast that with obviously the full volume that was hit last year. Globally, again, it was circa 45 to 50 billion US dollar equivalent. So it's a fourfold increase within that 3-year period.
Green finance has to be sustainable, has to be financially viable to attract the money that we need to address this climate change issue. It's not a philanthropy sector, so we need to provide, and that's the role of the regulation, is to provide this level of returns that are acceptable for the private sector, because they're not philanthropists.
And most of the banks will not finance coal anymore or something that's dirty. So everybody has to deploy their money into something else, and they're all waiting for us to develop more projects.
If we have government and regulators around the region to really get their act together, make it easier for people to finance, make the projects more attractive, for example, I think you're going to see a lot more potential on this. I think the other key development, and we'd like to see more of that, is the development of bond indices. You know, if you know, there are a lot of investors who follow bond index as a passive investors, and as you develop more bond indices, then there's actually more investors buying green bond.
And in this market where there's so much risk, there's so much sovereign risk, there's so much off-take risk, the only way to get your project financed is to make sure that your legal cost, your environmental permit, your ISHAs are in place. So it actually, for the provider of funding, it de-risks the project.
The perceived risk is reducing among some investors and impact investors, including impact investors, and especially led by the solar. The development of solar projects, because technology-wise it's pretty straightforward, and now investors are becoming more familiar with the sector. So the hope for me is this solar technology, solar sector will drive the rest of the renewable energy, because we see the 6, 7, 8% being now talked about because the perceived risk is changing.
And I think we have got the right momentum in terms of rating agency looking into it closely to define what's green bond. We got obviously a number of organizations looking to work together to obviously come to a convergence on standards, which I think is important. We've got more and more corporate clients also looking to invest in green bonds. So all that constituents is coming along. When it comes to bond financing, I think there is still value for banks to act as arrangers. I think obviously there's a lot of expertise and experience required to prepare a proper offering circular, because I think disclosure is going to be extremely important. But I think more importantly, the advice and the recommendation on when to go to the market, which market to go for, and how best to structure a transaction, I think is also a value add to the entire process. It is not impossible for someone to do it on their own. If you have obviously external legal counsel to support you, you have your auditor to support you separately, but I do feel that in general, when you look at a large-scale public, well-distributed bond financing, that there's still a lot of merits for institutions like ourselves to be involved.